Hello everyone, mga kapidak. So, long time no see. Wala si Katie today, so I'll be hosting in a way, no? And just introducing our guest speaker today for Crypto Convos. Sure matagal na kayo hinahanap for updates on what's happening in the crypto market, and I hope everyone's portfolios are still doing well and okay. For PDAX, we have some exciting announcements upcoming next week. So abangan nyo yan. But for today, we have Joseph, licensed portfolio manager and chief marketing officer of Open Journal. So sa mga kapidax dyan na laging nag-attend ng ating crypto convos, I'm sure you're familiar with him already. So I'll bring him up here. And hello, Joseph, sorry.
Thank you, bro, Kenneth. Hello. Good afternoon. Okay ba? Everything good?
Good afternoon. Yes. Not bad, not bad. How are you?
I'm good, Happy Friday and Happy New Year, pare, and everyone here.
Happy New Year and a happy almost Chinese New Year next week sa mga Chinese holiday naman for everyone. Yan. Okay, so anong pag-usapan natin today, no? You can just put up your slides and I'll leave the floor to you.
Thank you, Kenneth. I appreciate it. And let me just pull that up before we begin para iwas sa mga technical difficulty.
Ayan. First time ko lang din trying this out, no? StreamYard mga kapidax. So
Yes, so guys, welcome rin natin si Bro Kenneth. He'll be joining us and I'm looking forward to working with him and joining you guys for balance of the year, no? Marami tayong gagawin. So I think things are in order. Let me just present the whole thing. All good na ba? I think it's fine. It works.
I shall go out of the stream.
Thank you, Kenneth. I appreciate it, and G-Balls. So, what's up, mga kapidax? Good afternoon, happy Friday, and happy New Year. I missed you guys, and definitely we have a lot to catch up on and talk about, especially with all the crazy and volatile markets. So before we begin, I just wanted to shout out to all our Kapidax family, as well as, our very own mga open journal dyan. So Javi, Matt, Bro Jiro, Ed, Mike, Jessa, and all of our family members. Good afternoon. Good afternoon, Belle as well. Hello. Thank you for joining and helping us out. Bulo Sehi, welcome back. And I'm happy to see you here. And it's going to be an interesting afternoon where we discuss quite a lot of things. The elephant in the room of ano bang nangyayari sa cryptocurrency markets, the sell-off we saw, the volatility we're experiencing now, and where do you think, from a probabilistic perspective, where we can go ahead, but most importantly, understanding the big picture of the recent sell-off. So, once again, I hope everyone is okay. Grabe yung volatility, and I'm sure to an extent, natatamaan na rin yung mga portfolios natin. So I hope everyone is safe and okay. Kapit lang, guys. Grabe, hindi pa tapos yung boxing. The year just started, and it started off with a bang, and pretty intense, pretty crazy. But without further ado, I just wanted to introduce myself as well, because I recognize there might be new PDAX family members joining today for the first time. So guys, pa-comment naman dyan if you're a first-time attendee to Crypto Convos, because we did this last year, 2021, and we're gonna continue doing it this year for sure. And I just wanted to, meet the new people taking time and joining us today. So good afternoon again. I'm Joseph from Open Journal, the CMO of Open Journal and portfolio manager as well. And for those of you not familiar with Open Journal, Open Journal is really a community of traders trading the cryptocurrency market, which from our study and experience, we believe to be an opportunity over the next decade, despite as well all of the volatility, because alam naman natin that volatility applies both ways. And for any trader out there, this is where you want to focus your capital and energy on as a path of least resistance. Not saying it's going to be easy or it's simple, but for anyone who wants to call themselves a trader or someone engaged in the financial markets, cryptocurrency is going to be the area of focus and the opportunity. And coming in as a community, we're here to help make that better and help navigate your journey here, whether you're a beginner or someone who's more advanced already. We try to help navigate and add value wherever we can. More on Open Journal later if you have any other questions, but let's just get started. And I'm sure you have a lot of questions and are eager to know what is up. So, first and foremost, and this is generally going to be the, I guess, narrative or yung outline na papag-usapan natin today. I'll promise to keep this as simple as possible, pero there are gonna be some technicalities, pero walang problema. Kayang-kaya nyo yan, especially new members or especially people who have been attending multiple times already. Thank you for your support and let's get started. So, how do we make decisions in the financial market, whether we're a long term investor or a short term trader, whether we're trading the equity market, cryptocurrency? Ang dami-daming decisions na kailangan natin gawin. Whether we buy or sell, whether or not bullish tayo or bearish, whether or not the chart looks like it's going to go up or down. There are so many ways we can make a decision. We can make a decision based on what we read on the news, what the Fed tells us, what our mentors or communities tell us, or even what we see on social media, Reddit, Twitter, Instagram. Nga naman pics dyan. Ano ba yung next bagger or solid coin or opportunity na dapat natin pasukan? But we all know, guys, I'm sure some of you may be new, and to those who have been in the space for some time, mahirap, very challenging. And oftentimes, it can lead to analysis paralysis. Alam mo yun? Very choppy, sideways, volatile market, and we're not sure what to do. The Fed or the news is saying one thing, pero from a technical analysis perspective, uy, bounce play na ba to? Magrarally na ba to? Can I buy the dip? Or is it gonna be a dip that keeps on dipping? Syempre naman, we don't know the future. Wala tayong crystal ball. But as traders and portfolio managers, we can position ourselves in a scenario of highest probability in terms of understanding what's really going to happen. As nothing in life and in the markets is guaranteed, and it's all about responsible risk taking. So, in the event na maghalo-halo lahat, there are so many things telling us. Of course, we follow the chart, we follow price, but what's the narrative or what's the overarching framework which we want to do to be able to execute in a manner where we put ourselves in the highest probability of success, but more importantly, in a position where it's not the riskiest thing to do. And this is where this fine gentleman, Stanley Druckenmiller, legendary portfolio manager, trader, and hedge fund manager, introduces to us a concept which is super important. And this is a tweet or a blog post, but it pretty much is the overarching framework which we teach our Open Journal family members and which the team uses in guiding ourselves amidst this volatile market. So we don't really believe that earnings moves the market. It's really the Federal Reserve Board. And if we focus on the central bank and the movement of liquidity, meaning yung flows po ng pera, that's something that really moves markets, or at least is something we would focus on versus many other variables in which we can make a decision based on sentiment, based on fundamentals, based on valuation. I'm not saying these are not important, but in terms of listening or following the path of least resistance, which from our expertise and from our experience helps us navigate and really filter signal from noise. It's really about the picture of liquidity. And I don't want to preempt the presentation, but so that you have an easier time following what we'll talk about today, pretty much the reason behind all of this sell off, all of the volatility, is because we're seeing a siphon or sinisip-sip yung liquidity. Meaning, as there are outflows in the space, we can expect selling pressure, and we can see that reflected on the chart. Prices declining and things being sold off. And this is not just in the cryptocurrency market, but also in risk assets in general. When we look at emerging markets like our local market prior to the action we saw today, and also the US stock market, where the siphoning or the outflow of liquidity is contributing a lot to the volatility, the profit taking, the sell offs, and the selling pressure we're seeing. Now, before we talk about why that's happening and how we got there, I just wanted to take a trip down, history. Promise dito boring, medyo important to understand why the Fed is so important. Central banks, for those of you in finance or to those of you in the space, people are going to be talking about interest rates, the Fed. Ba't sila importante? Ano ba kinalaman nila sa presyo, right? And if we take a history going back, it's really in the 70s during the Nixon administration when we abandoned the gold standard. Because before, when we had currency, let's say dollar or peso, dapat may katumbas yan na equivalent in gold. Meaning the central bank, the governments, they could only issue new currency, new fiat, if it had a respective equivalent in gold. Yun po yung tinatawag natin na gold standard, which all of our fiat currency used to be pegged to or backed by equivalent gold. However, due to things that economies were experiencing after the war and during periods of economic boom, they decided to suspend it temporarily, but hindi siya temporary because up until now, we don't anymore adhere to the gold standard. And basically, central banks, governments, they now had the jurisdiction and capacity to create more dollars or create more fiat currency, even if it didn't have a respective backing in quantity or an amount of gold. And that essentially led to the Fed being very important and the primary drivers of monetary policy. So guys, economics lang in high school and college, kung naalala nyo, when we talk about monetary policy, we're talking about the Fed or central banks. And if we're talking about fiscal policy, we're talking about governments. We're talking about taxes, we're talking about spending, we're talking about stimulus, right? So all of those stimulus checks we saw, which were being rolled out during the pandemic, hindi po yun monetary. That's part of your fiscal side, your spending side. But here are the three variables of monetary policy. You have interest rates, you have reserve requirements, and you have open market operations. Don't worry, parang complicated to, but we'll break it down very easily, right? So yung Fed or governments, they want to do either one of two things. Either expand the economy or contract it. And what I'll discuss today might be a general oversimplification, but so we don't get lost and we can appreciate the subject matter at hand, bear with me in our discussion today. So they can decrease or increase interest rates, which really reflect your cost of borrowing, to be able to determine mas madali ba or mas mahirap kumuha ng utang, to create debt, to get a loan, or for existing debt instruments. Is it easier to pay off or harder to pay off? Kaya if they want to expand the economy, they decrease interest rates para maengganyo yung mga taong umutang and as a result, be more productive, start a business, pay for things, have increased purchasing power. And on the contrary, pag in-increase na yung interest rates, up, people are less incentivized to take on debt instruments, and they have now an urgency to pay back the existing debt they have kasi uy, umi-increase na yung interest rate. So dapat I'll focus muna on my debt versus getting more and being riskier. The second one I'll talk about briefly, it's about reserve requirements. Basically, how much reserve amount banks should have on a daily or periodic basis. If they're trying to expand the economy, then they lower the reserve requirement, meaning mas marami dapat in circulation, mas marami na ginagamit yung general public, more should be out there in terms of supply. And the converse is true for contractionary efforts. Dapat ini-increase yung reserve requirement to reduce the money supply in the market. Now for number 3 naman, open market operations. This simply refers to the buying or selling of government securities like bonds, which we've been seeing they've done over the course of the pandemic. And if they want to expand the economy or expand monetary policy, they would be buying bonds, fattening or adding to their balance sheet. And kung nagbebenta naman sila or nagre-reduce, pinapapayat or liniliit yung balance sheet ng Fed, then that's more contractionary. So a way to think about it is really, are they expanding the economy or contracting it? Now, we'll drill down a bit deeper on interest rates since that's the primary thing we're focusing on today. And I'm sure to those of you reading reports on PDAX or Investograms or CNN or Bloomberg, they're going to be talking about monetary policy, the two sides of monetary policy. You have hawkish and you have dovish, right? Hawkish and dovish. You have the hawks pushing for rate hikes to contract the economy, mas aggressive po sila. And the doves, being dovish, rate cuts, mas relax, mas chill, mas growing, mas flowing. They're less apprehensive and they're less restrictive. So these are the classifications of the slants. So I recognize that it's not a binary thing. Alam mo yon, Joseph, hindi naman purely expand, 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 contract, contract, contract. There's a gray area, and kumbaga, economics is about finding yung perfect timpla depending on the economic situation at hand. Hindi naman 100% hawkish, 100% dovish. There are gradients in between, and these are the gray areas na mahirap, di ba? Because it's not as simple as pushing a button na, uy, expand, 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 contract, contract, contract. So for hawks, their primary focus is contracting the economy by virtue of reining in or reducing inflation by contracting the economy through rate hikes, increasing interest rates. And on the contrary, being dovish, it's more expansionary in nature, rate cuts to stimulate the economy. So a way to think about it really is, are they trying to stimulate spending or are they trying to stimulate saving or doing nothing? Are they being more aggressive in that nature or defensive for that matter? Now we have some background on the Fed, on monetary policy. We need to take a look at ano bang nangyari, guys. So, I'm sure we all aren't living under a rock. The past 2 years, we've been in a global pandemic and even arguably to one extent, a global economic crisis. And really, in order to stimulate the economy, stimulate the market, and keep things afloat, over the past few months or even year during the pandemic, the Fed has been enacting their open market operations, yung pillar number 3 I talked about earlier, in order to fatten up their balance sheet. They've been buying bonds which are issued by Treasury at a rate or scale of 120 billion US dollars per month during the pandemic. Now, that might seem like a lot, and I'm telling you it is. But why were they doing this? Ba't nila ginagawa to? They were doing this to be able to stimulate the economy, pump out money supply, and really get things moving and stimulate people and not make people panic. Which is why this is quite hindsight. But if we take a look at the chart of the US market, after the March 2020 low, which was exacerbated by COVID and all of the fear, uncertainty, and doubt about the pandemic, nag-V-rally yung US market, right? I mean, generally speaking, you had that very sharp V-shaped recovery upward up until the pockets of volatility we saw in the past few months. Things were okay, and to a large extent, they were attributing that to the Fed and their efforts for this manner. Not only on the monetary side were they buying bonds and promoting the purchase of these securities, but on the fiscal side, what did we see? We saw multiple stimulus checks, helicopter money, free money, alam mo yun? Some would call it individual dole out, right? For Americans, for people in the US. Now, for people who are, economists or finance majors, you might be aware of, uy, what's the risk here, right? There's no such thing as a free lunch. We gotta be borrowing money from somewhere, right? From theoretical tomorrow, right? Borrowing from our future. And this might have some risks, which is why all of the quantitative easing that was happening during the pandemic, this was done amidst a backdrop of inflation expectations. People at that time were worried about inflation. They were worried about all of this open market operations, all of this dollar printing. And fun fact, almost 40% of all dollars created were done during the pandemic. And I believe during one of my earlier crypto convos presentations, to those of you veterans who have been attending, it was at 30%. So nag-increase na yan from 30 to 40%. Can you imagine that? Almost half of all dollars created and in circulation and transaction weren't around pre-COVID. It was done during the pandemic through all of the money printing and quantitative easing as a measure to be able to make sure that the economy doesn't plummet down, or they're able to keep the markets afloat and keep Americans, the middle class, majority of who comprise the demographic of the American population, happy, fed, and hopeful, and not panicking, right? Obviously, a lot of what I'm saying is a general oversimplification for the sake of theoretical discussion para magets po natin. So, it of course goes deeper than that. Now, okay, Joseph, you talked about the Fed, you talked about the levers of monetary policy, you talked about all of the QE, all of the money printing, all of the risks that were happening because it might lead to some sort of inflation. Now, what did the Fed do towards Q4, tail end of 2021, and what did they say in their meeting a few days ago this week? Basically, they now had a more hawkish pivot, meaning they were dovish before. They were like, expand the economy, make sure things are okay. But now they're pivoting to more contractionary biases and measures. And they're doing this because they want to rein in on inflation. All of the open market operations, all of the money printing, supply and demand would dictate some inflationary pressure. And that is why in fourth quarter of last year, they started taking a more hawkish pivot where dinoble yung pace of tapering. Meaning, hindi dinoble yung rate in which they were purchasing bonds, but the rate in which they were tapering or declining or reducing that purchase, mas aggressive na. So kung dati pinapataba nila yung balance sheet, pinapataba nila yung ekonomiya by virtue of all of these levers of monetary policy, they were now flipping the switch. Not a 180, not full on tightening yet, pero tapering muna before we get on to tightening. Tapering first before we get on to full on interest rate hikes, which we will likely see maybe in Q1, March of this year. Now, in the recent FOMC or Federal Open Market Committee, the discussion this week, they were talking about how tuloy yung tapering schedule and they're really concerned about inflation. Now, here's what's interesting. You might be wondering what makes this different from before, right? All of the previous economic crises, all of the times where the Fed could sweep in, have quantitative easing, and everything becomes okay. The point in which they have to tighten, it's a brief correction in the market, and they have a 180 or they pivot back on the hawkishness and begin a dovish expansionary sentiment again. However, we might also be wondering, why are they doing that? And why are they doing it so fast? Bro, Seth, parang ang bilis naman. We were just, happy, QE, expanding the economy. Why was the pivot to hawkishness so fast? And this is really because for over 2 decades, 2.5 decades, we didn't have a genuine risk of inflation. Past few years, people would talk about it, say it's on the horizon, but generally speaking, it wasn't that high or wasn't that bad. What that implies is the Fed at that point in time before historically had mas maraming bala. They could allow it to drag on longer before they would take any form of hawkish or contractionary stance, and things were okay. But the problem we're seeing now is that inflation is on the horizon and they need to be able to rein in on inflation and control it before it spirals out of hand. Which is why, in the previous chart I showed you, yung ginawa nila in 3 to 4 years before, mas atat na sila. Mas fast-tracked. Kumbaga, IM speed sila regarding to the rate of tapering and tightening. Yung nagagawa dati in a span of 3 or 4 years of contractionary measure, of hawkishness, of reining in inflation, which wasn't around before, they're trying to do that within a span of 6 months today. Now, Joseph, are you talking Chinese? What are you saying? Kumbaga, mas atat, mas agresibo, mas sprak, mas wild na yung pace and rate in which they're contracting the economy kasi naghahabol sila against inflation. And syempre, inflation isn't good for the average American consumer since that would have an effect on commodities and things that they would consume in their daily life. So, this is especially challenging since syempre matatamaan yung financial markets dito. You might be wondering, so what's the effect on the stock market? What's the effect on cryptocurrency? More importantly, the opportunity we're talking about and we're all focused here today to maximize. 80% or majority of all tapering to tightening rate hike cycles have led to a recession or bear market, the fastest of which came less than a year after the first rate hike. Pero, Joseph, you talked about a lot of debt because of the pandemic. That might be higher and faster than it is today, right? Because of all of the debt we have in the system. And guys, when I'm talking about debt, I'm talking about debt in all ways, shapes, and forms. Individual debt for someone getting a personal loan to increase their purchasing power during the pandemic. I'm talking about families who have to take on a mortgage or take on a loan to be able to pay off their other loans, to be able to buy resources, expand their business, start a family, pay for education, all of these things. Even on a corporate level, where in order to hedge or protect against all of the supply chain headaches we had amidst the pandemic for obvious reasons, where global supply chains were disrupted, corporations like FMCGs like P&G, Unilever, Nestle, they for sure incurred more costs and maybe had to take on more corporate debt to be able to keep up with operations, to be able to keep up with the increasing cost of doing business, which got very messy and expensive and variable given all of the supply chain challenges we saw in the pandemic, and even on a countrywide level. And I don't mean to get political here because elections are coming up, but taking a look at the amount of debt that we had in our country during the Aquino administration or before the current administration now, it's significantly multiple times larger. And all of this debt was something which we didn't foresee coming as a nation state, as a corporation, as a family, or as an individual, because we didn't know that COVID was going to happen. Or we didn't think it would be this bad. Come 2019, 2020, we thought it would be done in 6 months or in a year. But 2 years in, and we're seeing so many uncertainties happen, many variants, increasing cases, a lot of complexity, especially after the holiday season. Now, where am I getting at? We have a lot of debt in the system, and the point or the period or the way in which the amount in which the Fed is going to increase interest rates might be too much that it breaks the back of the entire financial system. Yung tipong hindi na kaya ng ekonomiya to have that huge debt burden by virtue of larger interest expenses when you have your interest rates increase as a consequence of all of the debt happening. Everyone following so far? I think that's rather clear, right? We can only increase interest rates so much to the point that it just breaks the back of the financial system. I'm talking about interest rates. I'm also talking about yields, but I won't get too much into that. But generally, a similar picture. We want to be able to control it or keep it in bay as much as we can. Now, here's the facts, because you might be wondering, or for to those of you who are looking at a chart, you might be saying, Joseph, I'm following this, pero the US market did not top the last time that the Fed pivoted or moved to a more hawkish or contractionary stance. Pero guys, here's the difference, right? The difference between now and before is that the Fed is now caught in between a rock and a hard place because of inflation. Inflation, which was not a systemic risk we were looking at before, is a reality now. And it's something that the markets are pricing in. It's something that's becoming a reality. And now they're torn for the first time between Wall Street or the financial markets and Main Street or the constituents, your average Tito, Vic, and Joey, or Tom, Dick, and Harry in the US who are taxpayers and in the middle class, who are facing or are going to face the brunt of the inflation that we're already seeing and we're trying to rein in and reduce. Kaya it's a dilemma. Do we sacrifice or allow the financial markets to tumble in order to rein in on inflation? Or do we have a pivot and save the financial markets at the expense of allowing inflation to run hot? I don't know what will happen in the future, but at least from forward guidance, from what the Fed has been communicating over the past weeks and months, it looks like that they're going to rein in on inflation and allow some sort of correction to happen, which we saw over the past few days and weeks in the market. Now, the most important question is what will happen to the crypto market? I'm sure that's the $1 million question on everyone's minds, on everyone's hearts. Gaano kalalim yung correction? Tapos na ba yung correction? Where will this go? I talked over the past half hour about all of the macro, all of the things we're seeing. And just this week, the Fed communicated how they're likely to follow through with the tapering to tightening schedule. What do we do now, right? Because that's why we're all here. So, taking a look at the chart, some technical analysis for Bitcoin on a weekly time frame. We're currently at your purple line, your 100-day exponential moving average, right? We are at support, and this is also in confluence with, your previous lows over here during the COVID lows, and we're sitting at support. Now, is this going to rebound in a counter rally higher, or will this follow through lower? We don't know. We need to map the scenarios happening. And from our cycle analysis, Elliott wave analysis as a strategic bias, we're looking at some sort of a wave 4 base. And this base could be a flat or a triangle for Ethereum, which I'll show in the next slide, which is, similar naman to the Bitcoin chart to an extent. These issues are basing out, and pretty much we're at a crucial pivot point. Meaning, will this wave for sideways consolidation manifest itself in a flat, meaning we have a move higher from here? Or is there could it have been a triangle where we already saw the low and we continue to base out here before a follow through wave 5 higher? Or do we have a flat scenario, a wave 4 flat, where we might have some more downward risk? Again, we're not in the business to predict or to tell you with certainty ano yung mangyayari, but make you aware of the different scenarios. But at least our bias, again, just a bias, is a wave for sideways consolidation before a possible leg up higher if prices and technical evidence confirm what we're talking about versus rejecting it. And there might be an alternate count. Again, technical analysis charting, it's a 70 to 80% batting average. I'm not saying all in, buy the dip here, or to those of you having losses, I'm not saying things could go lower, but we need to be prepared for both scenarios. And generally speaking, this is the same outlook and picture we're looking at in the US market as well, which is also in its process of finding some sort of wave 4 base, whether that be a triangle or a flat. And our outlook on the crypto market could likely be connected to where the US market goes, as what we've been seeing over the past few days and weeks. Not saying that there's no way they could decouple, but we're yet to see that come to fruition and invalidate the bias. Long story short, please have proper risk management, execute your trades judiciously, please have astute risk management and position sizing. And everything I talked about today is not financial advice. It can change at any point in time, as you can see in the disclaimer below. And we're all here to monitor this closely as we're in important pivot points over the next few days and weeks. All good? So normally I have a watch list, but pretty much we're all on support watch. Will these supports hold? Where do we go from here? And maybe in the next month, we'll see some clearer setups and opportunities. But for now, all eyes, all focused. It's not a time to chill, pabanjing outside, hodl blindly, buying the dip blindly. No. To those of you trading, managing portfolios, now is a time to be 100% focused, as over the next few days and weeks, we'll wait for the market to tip her hand before we commit to the market and adjust accordingly. Everything I talked about is a bias, it's a guide, it's an outlook, and things could change at any point in time. Which is why I hope that was clear. I hope I gave a clear picture on what we're looking at and the risks and threats. And I wish everyone the best of luck moving forward. Before we move on to some Q&A or clarifications you might have, just a few announcements on my end, if you can indulge me. So first off is, if you want to be connected with Open Journal team, with Javi, Matt, myself, and other core members, we invite you to like, subscribe, and click the bell notification for our YouTube, where we posted just the other day a trade walkthrough, so you can have a taste of our system. And if you aren't certain yet, or you're on the fences about subscribing, you can know more about it. And of course, our Instagram as well, where we comment a lot of live notifications and announcements and promos and all of that. So para walang FOMO, guys, stay connected with us. We don't just have a Facebook page, which you're all well and aware of right now, but our YouTube and IG as well. Second, and if you can indulge, there's another session I have tomorrow. So sana hindi pa kayo sawa sa akin. Open Journal in partnership with Investa. Medyo mas trading na to, mas operating principles of technical analysis and engaging the markets. Tomorrow, 1:30 to 4:30 p.m. You can check out this poster posted on our Instagram and our Facebook with the link to the type form on attending. So basically, in the description of the poster where it's posted on our Facebook, you can have a link there to the type form to join. Guys, this is free, no discrimination, open to all, and I'm going to be excited to spend more time with listeners and subscribers tomorrow, where we talk more about trading, managing volatility, and spotting or mentally preparing our system for market leaders that could surface in the horizon. Last up, guys, we have some good news. We have a limited time only Open Journal subscription discount. To those of you who just need that extra push to join our Open Journal family, we open our doors to you, and we have a 15% discount on our 6-month and 12-month subscription. So What are you waiting for? You can key that in for any problems or other questions. You can ask here in the chat or you can message our Facebook or Instagram account. This applies to our 6-month and 12-month subscription. Medyo pa new year, new challenge tayo, guys. And yeah, we hope that you can capitalize on it. Limited time only until February 9. So, again, maraming salamat. Thank you for your time. And before we formally end, let's have some Q&A here. And yeah, feel free to ask any questions, clarifications you have. And I'll be looking at the comment section, taking a look at what you guys are talking about, and I'll keep you company and help navigate any questions you have. Maraming salamat, and I hope you guys learned a thing or two. Cool, cool. Wag mahiya, guys. You have any questions, you can put it over in the chat and I can help answer them. You're welcome, Alvin. Very happy to have you here. Also, another thing, Bro Jiro, maybe you can put the link to our Open Journal Light group as well. That would be a cool idea in case some of our Kapidacs also want to join our free group we have on the Investa platform with some other announcements and other clarifications as well. And yep, personal handles are here as well if you want to stay personally connected or ask other questions kung nahihiya kayo. Awesome. So if that was all clear and all good, and we don't have any questions or clarifications, then we can end our session. And if you remember any more, you can reach out to me and ask your, questions and clarify any things. Bulo Sehi, brother, you're welcome. Thank you for your time as well. Thank you, Kenneth. Thank you to the Open Journal team and family, Javi, Matt, Jiro, Ed, Mike, Jessa, and all of our family members. Mga kapidacs and ka-investa. Shout out as well to Belle. Thank you for helping me get all this settled, research as well, and of course, preparing for this. And yeah, we can call it a early session if there are no other glaring questions or clarifications. And if you think of any more, you can always reach out to me. And to those of you watching this from the recording, thank you as well. Sometimes people chime in late and watch this after the fact, and feel free to reach out for any questions. And we invite you to join our Open Journal family and community and stay connected with us here on our social media platforms. From PDAX, thank you. Good question, PDAX. Any insight on Powell or Fed or Putin banning crypto mining farms? If I read correctly, I saw around a headline or an article this morning talking about that there won't be a ban, or it's not going to be a ban per se, at least for Russia. I may be mistaken, but I think this is similar to what we've been hearing about China over the past 5 years about banning crypto, banning mining, and from a theoretical perspective, you can't stop it. I mean, these validators, these miners are going to continue to find a way, whether that be proof of work, proof of stake, and you just can't stop the blockchain. You might make it harder or have more barriers to doing it, but for those who want to continue doing it, are going to find a way to do it, maybe in another jurisdiction, from example, or in another locale, or in however other method they plan to skirt that and continue doing it outside legal scope and legal eye. So I hope that it makes sense, and I hope that answers your question. Alvin, since we are in election year, Does it have a direct effect as far as crypto is concerned? That's a good question. Every time we have something important in the world, people ask, will it have an effect on crypto? But this applies for the elections and it applies for everything I talked about today with the Fed and everything. It's not about the topic or the catalyst at hand or the event, but it's about how the market responds. So if the Fed, for some reason, continues their hawkishness, but we see the market rebound, recover, and try to go back to all time highs and beyond, then we follow price from a bottom up perspective. So, to add more on that, Alvin, it doesn't really matter what will happen to the elections. Maybe that could even have a stronger effect, maybe on the local market. But I personally would take it from a bottom up perspective, meaning from a technical standpoint, from my system, if there's a setup to execute, despite all of the uncertainty and political noise, it's just noise. And the market, more often than not, is forward looking 6, 12, 18 months down the line, and it prices in things accordingly. So if you have a fine system, then you'll be able to capitalize on opportunities despite whatever event might happen. I hope that's clear. And yeah, as much as we have a top down liquidity bias tracking inflation, deflation, as a community, we still execute bottom up, meaning if a stock or a cryptocurrency has a technical setup, we're going to deploy accordingly. We just use the liquidity narrative to determine the extent of risk on and risk off, how aggressive we are at deploying capital versus how defensive we are. But to be clear, it's not like a on or off sort of thing. We want to be able to be more exposed, more invested when things are risk on, and more defensive when things are risk off. Bro Giro, again, thank you for all your help and your support. Any thoughts on El Salvador and Bitcoin? From a theoretical perspective, it's good. You have nation states, especially those who have been riddled by hyperinflation, attempting to use it in real life and allow it to permeate in society. But with all honesty, it's going to be one hell of a ride for any economy that pegs its economy on a volatile asset. So I expect this volatility to continue, and volatility definitely cutting both ways on appreciation and depreciation, because that's the nature of volatility. It's the price we pay for performance. And guys, kung walang volatility, wala tayong bagger. We won't have super performance and super gains. So on them adopting and implementing it in their society, on a theoretical perspective, it's cool for adoption, proof of concept, but all eyes on the volatility as well. Meaning we can see their balance sheets exponentially growing as price appreciates and exponentially dematerializing or getting less as prices correct. So it's crazy, especially with the CEO of El Salvador, the president slash self-proclaimed CEO, trying to buy every dip and on his phone tweeting and buying. So best of luck to them. May it be okay. And it's history in the making to see what's going to happen. Right. Victor La Madrid just watched the Open Journal trade walkthrough by Joe M. So again, great job, Joe M. You're an awesome subscriber, family member, all you. Magaling yan si Joe M. Did well in last year's cup, I believe, or the year before that. What does DCP mean? I honestly haven't seen the video, but if I remember him explaining it, it's either a VCP or a volatility contraction pattern, which is a Mark Minervini term, which signifies volatility contraction before possible leg up higher. But if you're also heard something else na He might be talking about a DCS. It's a channel technique that is proprietary and exclusive for Open Journal subscribers. If you want to learn more about our system, you can join our paid subscription or stay connected with us in our free platforms. Thank you, Javi, as well, for the assist. And yeah, he might have been referring to VCP. Maybe I can answer few more questions. Arata-san, off-topic yata ako mga sirs, pero tatanong ko rin, it's fine, ask whatever you want. What's our pananaw on new crypto names na naglalaho na bigla sa panahon ng bear market? Paano maiwasan ng mga ganito? So during periods of, well, not a bear market to be technical about it, but during periods of immense volatility and sharp corrections, we're going to see leaders and laggards. For leaders which are showing strength, that can be an indicator of them moving ahead of the market, meaning they're ready to hopefully recover and rebound, or they're just slow to die. You get what I mean? I mean, not to be negative, but just being real. If they're strong now, it just means that tapos na yung extent na yung correction nila and they're ready to move sideways before a move higher, or late lang sila mas bumaba because kumbaga inunahan yung ibang mga laggard and the leaders are the last to move. Makes sense so far? But on the converse, if you're talking about other things which are selling off to a greater extent, then I'd stay away. I'd focus on leaders and not touch laggards because things are cheap for a reason. Meaning, for all intents and purposes, if I had a choice to focus my time on a chart like Terra Luna, Luna versus SLP, I'd be looking at Luna. I'm not saying buy Luna or short SLP. I'm saying from a risk reward basis, I would dedicate my time and effort to look for more stronger issues and long them versus trying to bottom fish things which sharply declined because the market is probably pricing in something. Meaning, assuming that the things showing relative strength now are recovering, moving sideways, they're going to be the leaders when we have the leg up higher. Does that make sense? The same logic why they were the leaders during the previous campaign or previous run. They're just the stronger ones now. Again, these are all to be validated or invalidated by price, but focus on leaders and you'll be fine, and tweak your position sizing depending on the environment. You don't have to go 100% deployed right away. Like what Mark Minervini mentions, deploy scouts first. And that was a tip he did to massacre everyone in last year's competition. Cool. Last question. So the last question I'll answer is thoughts on the BTC chart, monthly time frame, possible MACD cross. So your MACD, your moving average convergence divergence, is essentially a derivative of moving averages. And moving averages, we are aware, are a lagging indicator, meaning an astute trader or technician should not base their buy or sell based on crossovers. This is similar to when people say, uy, golden cross, buy, or uy, death cross, sell. These are more for added conviction or confirmation. Kumbaga, if you wait for that crossover, whether a cross up or cross down, and you're only using that indicator, it's probably going to be lagging and you might have missed majority of the move already. And this is something that the CMT curriculum also teaches, that it's a lagging indicator and you rather look at the trend line shifts of your moving averages. But to keep things simple, relying on their crossovers in and of itself It's a lagging tactic which might work sometimes, but generally speaking, since that is how MACD and moving averages are computed and derived, it's a lagging indicator. So I think that's good. We got to answer a lot of questions. I love the questions, and I hope that the answers added value and helped you in whatever way. If you have some follow ups, because I also want to respect everyone's time, reach out to me and we can just talk about it privately and I can help you where I can. And you can also attend tomorrow if you want to learn more or also have another chance at an open forum. And a special surprise for those attending tomorrow, giveaways to 1 month open journal subscriptions. So if you want a chance to win that, you got to sign up for the webinar tomorrow. Details on our Facebook page with the poster of me with Investa talking about first principles. With that, want to respect everyone's time. Have a good evening. Stay safe. Take care. Maraming salamat. Thank you, Open Journal team, Habs, Matt, etc. for your time. Thank you, PDAX. Thank you, Kenneth. Thank you, Investa. Thank you, Bell. Thank you, Kuho. Thank you to everyone attending. Maraming salamat. Take care. Stay safe. Watch the markets closely. Don't get wrecked. And ingat. Good night and peace.